In today's news, Bitcoin continues to dominate the cryptocurrency market, while Ethereum attracts institutional interest. Additionally, regulatory changes are shifting the landscape for stablecoins. Here are today's top 10 stories you need to know. Today, the total cryptocurrency market cap reached approximately $4 trillion, marking a significant psychological milestone. This increase reflects not only Bitcoin's ongoing strength, but also broad participation across the entire crypto ecosystem. A higher market cap suggests that both institutional and retail investors are actively participating, which is a positive indicator for the overall health of the market. As more capital enters the space, it can lead to an increase in media attention and bullish sentiment. Investors are likely to see this as a sign that the crypto industry is in a strong, macro-driven expansion phase. Historically, new highs in total market capitalization have reinforced positive market sentiment. If this trend continues, we may see more aggressive buying in the event of any dips as the liquidity in the market grows. The broader participation indicates that the industry may be moving into a more sustainable growth phase. Overall, this milestone sends a clear message about the resilience and potential of the cryptocurrency market moving forward. Recent developments indicate that U.S. regulators are becoming increasingly open to partnerships between banks and stablecoin issuers. This shift represents a significant change in the regulatory landscape for cryptocurrencies, particularly for stablecoins, which are essential for on-chain settlement, trading, and liquidity in decentralized finance. As regulators offer more clarity, it could enable banks to engage more fully with stablecoins, as enhancing their role in the broader financial system. This constructive regulatory tone could lead to greater adoption of on-chain finance, making stablecoins a more integral part of financial transactions. By legitimizing stablecoins within the regulatory framework, we may see an increase in institutional interest and participation. The market is responding positively to this sentiment, as it could unlock new opportunities for payment systems and blockchain networks. In the long run, this regulatory clarity may prove to be a catalyst for innovation and growth within the crypto sector. Despite fluctuations in short-term ETF flows, institutional accumulation remains a major driving force behind the current crypto rally. This trend is crucial as institutional buying tends to be slower and more consistent compared to retail trading, which is often swayed by market emotion. The ongoing demand from institutional investors indicates a robust underlying interest in cryptocurrencies, suggesting that larger players are strategically positioning themselves for the long term. As these institutions accumulate assets, it supports bullish sentiment and can lead to greater stability in prices. The behavior of institutional investors is generally less reactive to market noise, which can provide a stabilizing effect during volatile periods. Observing this trend, many analysts believe that continued institutional involvement will contribute to a more mature and resilient market. In the future, as more institutional players enter the space, we can expect a shift in market dynamics and potentially new products tailored to meet their needs. Ethereum has garnered significant attention from institutional investors, particularly through strong ETF inflows. This demand not only enhances Ethereum's liquidity, but also positions it as a key asset in the market. Currently, ETH is trading near critical resistance levels, making this an important phase for its price action. The influx of institutional capital can offset short-term hesitations in price and potentially lead to larger price movements once momentum builds. The growing institutional interest in Ethereum is indicative of a broader acceptance of DeFi and other Ethereum-based applications. If this trend continues, it could lead to a rotation of capital into Ethereum and related assets, further supporting the ecosystem. As Ethereum solidifies its position, it may provide a counterbalance to Bitcoin's dominance, allowing for a more diversified market. Moving forward, many analysts are watching for potential breakouts that could signify a new upward trend in Ethereum's price. Bitcoin has experienced a notable surge in value, driven by rising optimism surrounding the Clarity Act, which seeks to establish clearer regulatory guidelines for cryptocurrencies in the United States. This legislative initiative is seen as a potential game changer for the entire cryptocurrency market, especially for Bitcoin and other large-cap assets. Historically, regulatory ambiguity has stifled investment in digital currencies, creating a climate of hesitancy among institutional investors. As clearer regulations emerge, uncertainty diminishes, fostering an environment more conducive to investment. The current positive sentiment is reflected in Bitcoin's price movements, which have shown resilience amidst market fluctuations. If the Clarity Act progresses successfully through Congress, it could lead to a significant reevaluation of crypto assets and exchanges, enhancing their legitimacy. Looking ahead, as regulatory policies evolve, they will play a pivotal role in shaping investor confidence and market dynamics, ultimately influencing the long-term trajectory of cryptocurrency investments in the US and beyond. In a notable trend, higher beta altcoins are currently outperforming Bitcoin, signaling a shift in trader confidence within the cryptocurrency market. Recent data shows that Solana has emerged as a significant mover, reflecting a growing appetite for faster-growing assets. This trend indicates that traders are increasingly willing to take on risk, diverting capital from Bitcoin into these alternative cryptocurrencies. Historically, when altcoins outperform Bitcoin, it often suggests a risk-on sentiment, where investors seek potentially higher returns amidst market volatility. However, this strategy can lead to strong short-term momentum, but also raises the risk of sudden market corrections. The current conditions underscore a selective speculation phase, where investors are eager to explore innovative projects and ecosystems. As altcoins gain traction, it mirrors a broader trend of diversification within portfolios. Looking ahead, the performance of Bitcoin relative to these altcoins will be critical to monitor, as it can provide valuable insights into shifting market dynamics and sentiment, particularly in the context of regulatory developments and technological advancements in the crypto space. Bitcoin continues to serve as the benchmark for the entire cryptocurrency market, even amidst mixed price action. Currently trading around the low $80,000 mark, Bitcoin's recent volatility shows its role in shaping overall risk appetite across the crypto landscape. Despite any pullbacks, the market remains structurally optimistic, indicating that investors are treating Bitcoin as the safest liquid crypto investment. The elevated Bitcoin dominance suggests that capital is still flowing towards it, reinforcing its status as a market leader. This classic setup, with Bitcoin consolidating above previous support levels while altcoins show more aggressive movements, is typically viewed as a positive sign. Should Bitcoin maintain this critical support level, it could preserve the broader bullish trend across the market. Analysts are watching closely to see if this trend continues, as it may signal further capital inflow into the crypto sector. In the coming days, the performance of Bitcoin will be pivotal in determining market sentiment and direction. Ethereum's narrative continues to strengthen as it attracts substantial institutional interest through increased ETF inflows. Recent reports indicate that Ethereum ETFs have seen a significant uptick in investments, reflecting growing confidence among institutional investors. This surge in demand highlights Ethereum's potential as a key player in the cryptocurrency market, especially with prices trading near critical resistance levels. The substantial inflows into Ethereum ETFs bolster liquidity and can help stabilize prices in the short term, reducing volatility often seen in crypto markets. Analysts believe that if Ethereum maintains this upward trajectory, it could lead to a capital rotation into Ethereum and related assets, further enhancing its market position. The growing institutional interest is also indicative of a broader acceptance of decentralized finance, DeFi, applications, and Ethereum-based projects. As more capital flows into Ethereum, it is expected to drive innovation and expansion in the decentralized finance space, fostering new developments and applications. Looking ahead, Ethereum is poised to continue playing a vital role in the evolving landscape of cryptocurrency investments, potentially solidifying its status as a foundational asset in the digital economy. A recent analysis indicates a more constructive regulatory environment for cryptocurrencies, particularly regarding stablecoins. This shift comes as U.S. regulators express a willingness to explore partnerships with banks, aiming to enhance the functionality and adoption of stablecoins. Stablecoins, which are digital currencies pegged to stable assets like the US dollar, serve as the backbone for on-chain settlements, trading, and liquidity in decentralized finance. Historically, regulatory uncertainty has hindered the growth of this sector, but recent signals suggest a more collaborative approach. By fostering regulatory clarity, banks may become more involved in stablecoin activities, unlocking new opportunities for compliant on-chain finance. This increasing openness from regulators could lead to greater legitimacy for stablecoins within the traditional financial system. As stablecoins gain acceptance, they may facilitate smoother transactions, lower costs, and improved efficiency in payment systems. The evolving regulatory landscape is likely to positively influence overall sentiment in the cryptocurrency market, attracting more institutional investors. The future of stablecoins appears increasingly promising, with potential benefits extending beyond finance to enhance blockchain infrastructure. As regulators and financial institutions collaborate, we can expect innovative solutions that further integrate stablecoins into everyday financial services, paving the way for a more robust digital economy. Bitcoin remains the anchor of the cryptocurrency market, exhibiting resilience in a high volatility environment. Currently trading around the low $80,000 area, Bitcoin's price fluctuations are indicative of its significant influence over the market's overall risk appetite. This dominance is particularly noteworthy given the backdrop of regulatory developments and macroeconomic uncertainties that have historically impacted investor sentiment. Despite a modest pullback, Bitcoin's continued prominence suggests that investors are treating it as the safest liquid asset within the cryptocurrency space. This phenomenon reflects a classic, strong market, rotational leadership setup, where Bitcoin consolidates above previous support levels, while altcoins exhibit more aggressive movements, often driven by speculative trading. The implications of Bitcoin's performance extend beyond immediate price movements. It shapes investor sentiment and decision-making across the entire crypto ecosystem. When Bitcoin rallies, it often leads to increased investment in altcoins, amplifying market enthusiasm. Conversely, a decline can trigger widespread caution. As we look forward, the critical question will be whether Bitcoin can sustain its momentum and further solidify its position as the foundational asset in the cryptocurrency market. Analysts predict that if Bitcoin holds its key support levels, it could pave the way for a new bull cycle, potentially attracting institutional investors. The coming days will be pivotal in determining the trajectory of both Bitcoin and the broader digital asset market. Thank you for joining us today. Which story shocked you the most? Let us know in the comments, and don't forget to like and subscribe for more news.